Hey guys, welcome to another accounting quiz on the channel. Today's topic is going to be IFRS versus US GAAP. IFRS stands for International Financial Reporting Standards. US GAAP is generally accepted accounting principles in the United States. And if you're an accountant nowadays, you're going to be realizing that you need to be familiar with both sets of standards in order to be successful in your career. So, as I have shown you in the past, when I show you a question and its answer, I'm going to show you the correct answer first, and then I'm going to tell you the wrong answers, why they are wrong, because that's how we learn when we consider why the wrong answers are the wrong answers to a question. If you're new to the channel, welcome. My name is Bill Hanna. I'm the financial controller. I've been a licensed CPA and a controller in New York City for the last 18 years. And this channel is where I communicate with you and I teach you the lessons that I learned over the last 18 years in accounting and financial analysis. So if you've taken this quiz in the past, you know the rules. The rules are 12 questions, and you go ahead after each of the questions and mark a point for a correct answer that you get, because we're going to go ahead and add up these points at the end to see how you did. And the rules are, if you get 10 plus correct, that's excellent. 8 to 9, that's good. 6 to 7 correct, then you need to focus a bit more. Less than 6, then you need to study. Question number 1. Which statement is true regarding IFRS adoption? A. Over 120 countries require or permit use of International Financial Reporting Standards, IFRS. B. Canada is the most significant holdout from the use of IFRS. C. A foreign company in the USA is prohibited from using IFRS if they use IFRS in their home country. Let's start a 10-second counter. Okay, and the answer is of course A. Over 120 countries require or permit use of International Financial Reporting Standards. I think it's about 140 countries. B. Canada is using IFRS, so Canada is not a holdout. C. Foreign company in the USA is prohibited from using IFRS if they use IFRS in their home country. Of course, they are permitted to use IFRS if they use it in their home country. Okay, question number 2. Which of the following represents a form of communication through financial reporting, but not through financial statements? A. Statement of financial position. B. President's letter. C. Income statement. Or D. Notes to the financial statements. Let's begin a 10-second counter. Of course, the answer is President's letter. President's letter is usually the first part of the annual report and is primarily or a primary way for the company's management to communicate with stakeholders. And the letter typically highlights the company's performance over the past year and discusses current and future business strategies. Of course, answer A and C, these are financial statements. The notes to the financial statements are considered part of the financial statements. So the correct answer is B, the President's letter. Question number 3. What would be an advantage of having all countries adopt and follow the same accounting standards? A. Consistency. B. Comparability. C. Lower preparation costs. Or B and C. All right, 10-second counter here. Alright, the answer is D, which is B and C. Comparability, when we have the same standards, we have better comparability. And C, lower preparation costs, because now countries across geographies will be using the same accounting standards. You could say A, consistency, but it's a weaker answer, not as strong as comparability and the lower preparation costs. So it's B and C. Okay, now for question number 4, the process of identifying, measuring, analyzing, and communicating financial information needed by management to plan, evaluate, and control an organization's operation is called financial accounting, managerial accounting, tax accounting, or auditing. Let's begin a counter here. 10 seconds. All right. Of course, the right answer is managerial accounting. Financial accounting is just the process of recording of business transactions and closing the period and creating financial statements. Tax accounting is the process by which we record tax provision and tax transactions on the books. And auditing is a process by which the financial books and records are analyzed and examined to determine whether they represent the financial and economical position of the company. So the answer is B, managerial accounting. Okay. For question number 5, IFRS sometimes refers to allowances as A, revenues, B, discounts, C, provisions, D, reserves. Let's begin 10-second counter. And the right answer is provisions. IFRS usually refers to allowances as provisions, not as revenues, not as discounts or reserves. Okay, if you're having fun so far, if you're learning, I want you to go ahead and like this video, because that's how you help the video reach more viewers and help the channel. All right. Question number 6. For fixed assets, all of the following is treated the same under US GAAP and IFRS, except A, asset disposal, B, recording at cost, C, changes in depreciation method, and D, revaluation of a plant asset. Okay, let's begin a 10-second counter. All right, the correct answer is revaluation of a plant asset. This is the one that is not treated the same under IFRS and US GAAP. IFRS allows revaluation of a plant asset, while US GAAP only allows revaluation for marketable securities, not for plant assets. For the top 3, A, B, and C, asset disposal, recording at cost, and changes in depreciation method, they are the same under IFRS and US GAAP. The only different one is the revaluation of a plant asset, where IFRS allows for that revaluation. All right, let's go on to the next question. Question number 7. For depreciation of a fixed asset under both IFRS and US GAAP, you can use component depreciation. Which of the following is true in relation to component depreciation? A, it is allowed under IFRS and required under US GAAP. B, it is required under IFRS and allowed under US GAAP. Or C, it is required by both IFRS and US GAAP. And let's begin a 10-second counter. All right. All right, of course, the answer is B. It is required under IFRS and allowed under US GAAP, right? The US GAAP would only allow it if you can demonstrate that a component of the fixed asset has a different useful life, while the IFRS require that if you have an asset or different components of an asset that have different useful lives, you can use the component depreciation. Question number 8 is a true or false question. IFRS allows companies to revalue plant assets to fair value at the reporting date. Companies that choose to use their revaluation framework must follow revaluation procedures. If revaluation is used, it must be applied to all assets in the class of assets. This is a true or false question, and let's begin a 10-second timer. And of course, it is true. This is one of the biggest difference between IFRS and US GAAP. IFRS allows companies to revalue plant assets. US GAAP does not. The only kind of asset that US GAAP would allow for revaluation is marketable securities. Question 9. IFRS allows companies to revalue plant assets to fair value. Which of the following statement is correct regarding this revaluation? A, at the time a company purchases an asset, it must decide whether to follow revaluation procedures for the asset. Once the election is made, it must be followed for the remainder of the asset useful life. B, assets that have experienced rapid price changes must be revalued quarterly. Other assets can be revalued on an annual basis. C, the journal entry to record the revaluation when the asset price has increased includes a credit to the account revaluation surplus. All right. We have a 10-second counter here. And of course, the right answer is C. The journal entry to record the revaluation when the asset price is increased is to do a credit to account revaluation surplus. The debit obviously is to the asset, so debit an asset, credit account revaluation surplus, which is an equity account. A is wrong because the company does not need to make the decision on the revaluation procedure at the time of purchase of the asset. And B, the assets that experience rapid price changes must be revalued quarterly. No, it should be revalued annually, not quarterly. Okay, so the answer is C in this case. All right, question number 10. On January 1st, 2024, Michelin Company, a calendar year company, is issued 9 million euros of mortgage notes payable, of which 3 million euros is due on January 1st of each of the following 3 years. The proper statement of financial position representation on December 31st, 2024 is A, current liabilities 9 million euros, B, long-term debt 9 million euros, C, current liabilities of 4.5 million, long-term debt 4.5 million, or D, current liabilities 3 million, long-term debt 6 million. All right, let's begin a 10-second timer. All right, of course, the correct answer here is D. Current liabilities for 3 million euros, long-term debt for 6 million euros. This is because the 3 million euro portion of the total 9 million is payable within 12 months, and that makes it a short-term or a current liability. Number 11, IFRS allows companies to revalue plant assets to fair value. When an asset has increased in value, where is the account revaluation surplus is reported? A, on the income statement as part of income from continued operation. B, on the income statement as part of discontinued operation. C, on the statement of financial position as part of equity. 10-second timer here. Of course, the right answer is on the statement of financial position or the balance sheet as part of equity. So the entry to record an increase in value of a plant asset is going to be debit to the asset and credit to this equity account called revaluation surplus. Not A, not part of the income statement, or B, neither continued or discontinued operation is correct answer. It goes straight to equity. Okay, let's go to the next question, which is question number 12, a true or false statement. The use of IFRS standards by American companies listed on the New York Stock Exchange is permitted but not required. Is that true or false? Let's begin a 10-second timer. All right, of course, the correct answer is it's false, right? This is an American company. American companies listed in the New York Stock Exchange are required to use US GAAP. The companies that are permitted on the New York Stock Exchange to use an IFRS standard is going to be foreign companies that use IFRS in their home countries. Okay, I hope you enjoyed this session, and in conclusion, if you're an accountant and if you are familiar with both US GAAP and IFRS, you are valued at a higher rate than an accountant that knows only one set of standards. I hope you enjoyed this, and I'll see you in the next quiz.